Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thank you for having me.
I mean, what a difference a week makes, at least in Bitcoin land. But, we've had a rally in equities. The gold rally has faltered. But yet Bitcoin on Monday, so we're recording on Wednesday, April 23rd at around 1 p.m. Eastern. It's important with how fast news is moving that I call out those timestamps for these interviews so that people know when we're talking. On Monday, Bitcoin was up, gold was up, treasuries, dollars, and equities were all selling. Then Tuesday, gold was down, Bitcoin and equities were up, and dollar was up slightly. And today, equities and dollar and Bitcoin are up again. Bitcoin's almost at 94K. What's your take right now? Where are we?
Yeah, no, I mean, we're just playing headline ping pong right now. And we're nowhere closer to a tariff resolution than we were a handful of days ago. So even with all of the information we've gotten over the past week, we really haven't gotten anywhere, is kind of my assessment. Beimnet came out later after his morning presser and said a deal with China may be 2 to 3 years away. He also said that Trump hasn't approved the cuts to the Chinese tariffs, as was highlighted in the Wall Street Journal article this morning. And Trump did an impromptu press conference today, kind of walking back a little bit of his positive tone that he had yesterday at the the 5 o'clock swearing in of Paul Atkins. And so, this seems like an administration that got a little bit worried by what was happening in FX markets, bond markets, and equity markets, and wanted to kind of assuage market participants a little bit. But ultimately, Trump is a protectionist. He wants tariffs. And even the most benign tariff outcomes are still kind of bad. And so, we've had an equity market rally back to kind of the trend highs, 5,500, which is kind of where you were at when you had that big short squeeze day. That was the third highest performing day for the S&P. So we kind of got back to those levels, and we quickly retraced lower once Beimnet was like, hey, Trump hasn't approved the tariff cuts. And even today, like the someone in the UK came out and said, we're not in a rush to do a trade deal with the US. Right. And so, by Trump coming out and sounding a little more soft, like that does kind of give you a little bit less negotiating power. And so, I think if you're sitting as one of the countries trying to strike a trade deal with the US, like, the US is going to be protectionist, and the degree to which doesn't really matter right now. And the other thing I'd like to highlight, though, is all of this uncertainty around tariff policy, right, literally causes businesses to slow down and not do anything, right? If you're telling me that the tariff is somewhere in between 125 and 35% for China, and it's 125 right now, and there's a chance it comes down, like, why am I going to buy anything now when the tariffs are, absurdly high? It's also like I need to plan like years out, and this kind of like volatility from the administration like doesn't make for sound corporate policy. And so I think more and more you're going to continue to see companies not give forward guidance, especially those that are particularly impacted by tariffs, because they just don't know what the next 3, 6, 9 months holds. Yeah, that's kind of where we're at. In terms of Bitcoin in particular, I think the rally in equity markets certainly helps because, Bitcoin has traded predominantly like a risk asset. And as equity markets go up and crypto equities in particular rally, that gives them more ammo in terms of, the at the money stock selling programs that they have. And so the higher these stocks go, the more Bitcoin, some of these players are able to buy. And so, yeah, Bitcoin's well supported right now. And it's one of those assets that, like, once sentiment shifts, like it can become a tsunami pretty quickly. And that's because of things like, short squeezes, right? Like ton of shorts got squeezed out, yesterday and today. You had multiple standard deviation days in crypto equities. You had like massive, thousand, like I think there was a 12,000 OI cut that happened yesterday that took Bitcoin up like 2,000 points because somebody had to buy a shit ton because they were getting stopped out. And so like there are things like that that drive price higher, and then when price goes higher, that attracts more people to speculate on it. That drives the stocks higher, and it becomes one of these like reflexive, assets. And it's nice to see. Question is, will that continue? Will stocks go lower and kind of lead to the opposite reflexivity at some point? And so it's nice that Bitcoin's back above 90K and holding there. And it's nice that some of these crypto equities are bouncing. But in terms of sustainability, that's still a TBD.
Yep. All right. So you're not holding your breath necessarily. We're not headed in your mind imminently back to new all-time highs with Bitcoin after just, it being
It
bearish
wouldn't surprise
2 weeks
me.
ago, a week ago.
It wouldn't surprise me, and I wouldn't be short the asset right now. I think what we've always advocated for in Bitcoin for folks is a reasonable allocation in your portfolio, somewhere between 1% and 5%. And I don't think that's ever going to change whether the market's going down or up. This is an asset class that's here to stay, and I'll say, you know last night, I fell asleep to watching a Ray Dalio, podcast, which is what I do in my free time, people. But it was so interesting. It was from a couple months ago. Obviously, Bitcoin hadn't, gone down 30,000 points at that point in time, but it was fascinating how often Ray Dalio mentioned gold in the same breath as Bitcoin. Right, one of our greatest macro thinkers, of our generation, consistently thinking about Bitcoin as a store of value in the context of long-term debt cycles, fiscal sustainability, and portfolio allocation. Right, like he is, the king of the all-weather portfolio, etc. And so, it's one of those things that you have to realize that it's still in the macro kind of toolkit. Sometimes it's favored, sometimes it's not. And a lot of times, folks will look at alternative trades. But it is part of the lexicon of a macro investor.
Yeah, it makes sense given its fundamental properties, but then the Veblen good nature of it, right? When it goes up, it becomes more attractive to speculators, sometimes takes over. For a lot of its life, it's taken over. And then people start owning it for risk returns rather than for, hedging purposes. I wanted to shift gears a little bit, still sort of on the Bitcoin topic, though. Cantor Fitzgerald and SoftBank and Tether and Bitfinex have announced a new company, Capital 21 Capital, that will be led by Jack Mallers, and it is described as the consortium is creating a multi-billion-dollar Bitcoin acquisition vehicle that will absorb billions in Bitcoin from the other partners and use the funds it raises in an attempt to replicate the success of MicroStrategy. Masayoshi son and the young Lutnick who runs Cantor, and Paolo and Jack Mallers teaming up to do what this is from the Financial Times yesterday, says is another attempt at replicating MicroStrategy. What do you think of that? Can the market bear more MicroStrategies? And also, does that change the SoftBank being involved, one of the largest investors in the world? Does that sort of alter the way that maybe others will think about this strategy?
Um, I think everybody's familiar with the strategy at this point, and investors in MicroStrategy, investors in crypto understand it, and so I think there was a significant first mover advantage to Saylor and MicroStrategy. One, because when he started doing it, interest rates were super low, right? And he could borrow money at very low levels, and given the volatility of his stock, issue converts at very cheap levels. He issued some this year at 0% interest. But and so like it's going to be very hard for an institution to replicate that, partially because Bitcoin's rallied so much as well, right? Like when Saylor was buying in the 20, 30, 40 100,000 area and it went up so much, it became a lot easier to justify it. But when you're going to do it at all-time highs, when it's worth this much and it's harder to push higher because law of large numbers, etc., it's a bit more difficult. But I do think there is appetite for this type of paper. Maybe not as much appetite domestically as there once was, but abroad, in markets that don't have a structure like this, where there are tax advantages, where there are potential liquidity advantages, bid offer, things like that. Um, there is a place for those types of vehicles. Like owning Bitcoin in stock form might be better for people than owning it as a commodity or as an asset they have to self custody or trust in a third party, etc. And so I think there is still runway left on that trade, but it's one that I'm very cautious on because intuitively it doesn't make sense to buy something basically buying something that is worth half as
I
much
mean, paying a
as
premium basically
yeah,
for the Bitcoin
exactly.
exposure, right? I think your point is well taken. This is something I've thought about, which is like, maybe in every market, there's a market for one of these to do well, right? Like in Japan or in Brazil or in the US.
Mexico, Brazil, yeah,
But when you start having a lot in the same market, while the management and such, maybe even the strategies are slightly different, if the strategy involves selling corporate debt to fund purchases, isn't that basically the corporate debt, like the fixed income, the convertible bond buyers? Isn't that the same cohort as people? Aren't isn't if 21 Capital does like a convert issuance, isn't going to compete with MicroStrategy's converts, right? Like there's only so much. Maybe there's still more, but it seems like it's a
and
yeah.
and the market's gotten smarter in the sense, like, they know that they can be subverted in the cap stack by a new capital structure after they've issued a ton of converts and stuff. So, and a lot of the converts, recently started trading cheap because, credit spreads widened out and the new cap thing. And so there's volatility to this type of stuff. And Sailor, quite honestly, has pumped a lot of paper into the market. And there is kind of like a saturation point. And I would argue you're kind of close to it. But the ATM side of things, the people love stocks and retail consistently buy stocks, and they like stuff that goes up. And so if something has momentum to the upside, like, people will invest in it. Uh, and so I think there's a bit of bandwidth, but I would caution that, when you issue debt, you do have to repay that debt, and you can only repay that debt by rolling it or actually paying cash to, exhaust the offering. And so, uh, there will come a moment where, you kind of do have to deal with the debt you've issued. So it might seem like free money right now, but ultimately, like, your debt will come due.
All right, last thing before we wrap here, Bibnet. Gold off a little bit, was making new all-time highs almost every day for a couple weeks. As we record again around 1:20 p.m. on April 23rd, it's trading at around 3,300. It got as high as 3,500. What this is when equities had been selling off, U.S. fixed income, sovereign debt was selling off, treasuries. When you're in an environment of uncertainty, I think about COVID, right, where people just raced into the treasuries for safety, right? Um, People weren't, or the world, maybe some people were, but on a net basis, people have not been flooding into the long end of U.S. debt. Uh, I guess because the stability of the U.S. is in question, and the questions about future inflation rates are in question. But so it looked like maybe they've been piling into gold. Does this little the last few days with gold now down, from 3,500 to 3,300, does that tell you anything about, is this sort of still short term noise, kind of like
It's
maybe the
short-term
Bitcoin is?
noise. It's short-term noise. I mean, the math on the US fiscal stuff has not gotten any better, right? We're running, like, the most like mid-April figures is the deficit is at $1.3 trillion already. Folks are talking about, well, we'll close at a $2 trillion deficit this year, but we're 4 months and change into the year and you're running 1.3. right? And the fiscal cuts and stuff, haven't really happened in a meaningful way, and so the fiscal situation isn't getting any better, and the tariff resolution is still very, very long away. Best saying 2 to 3 years for a trade deal with China, right? And so, and you just have to think about like why gold is going up. It is a flight to quality, but it's also a flight away from dollars. And if you just think about investing over the past 2 decades, right, the whole world is overweight US equities and US assets still and US dollars, right? You can't go from overweight to market weight in the span of 3 weeks if you're, a real money, huge institution, sovereign wealth fund, reserve manager, large bank, whatever it may be. And so that shift just takes time. And what you have to also keep in mind is that, gold not only has, a bunch of central banks buying it, real money buying it, but there's a ton of speculators in that market, retail players in that market. And so it's going to exhibit noise along the way, but fundamentally, like nobody's fiscal situation is really getting that much better. The fundamentals of gold get better every day as the US and other parts of the world continue to have to pay tons of money to service debt, and that ultimately eats into productive capacity for those dollars. And if you really think about like where we are in kind of long-term debt cycles, like it's not looking good, and the math catches up to you quicker, and so like every day like the debt goes higher, and with long-term yields rising, it gets more expensive to finance that debt, and it comes at the cost of huge productivity gains that you would have had otherwise. And so it's not you know it's not something you should think about in day-to-day movements. It's something that you should think about in monthly, quarterly, yearly movements.
All right, my friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thank you for having me.